Good morning, traders. This is Michael coming to you from GammaEdge on Thursday, September 7th. We're going to go ahead and get started with our pre-market morning strategy session and briefing. We'll go ahead and jump right into it.
Unlock your potential with a comprehensive suite of investing tools and expert education with GammaEdge. Start your free 14-day trial today.
This is the SPX PM settled, all expiries turned on. Again, quickly systematically go through the chart. First notice that we are put dominated. That means we are put dominated above and below spot price. Very easy to see with the red net deltas there. Spot price denoted by the yellow bar. Transition, the white box, very narrow transition, 44.70, 44.75. If we need to see price stay above the P-trans level, which would be 44.75 for a significant amount of time, to look for any movement upward in the overall market structure and price action. Again, 44.50 was an important level yesterday. We dipped below it just slightly for roughly about 15 minutes and then came back above. And we denoted the 4,400 down below a significant level of liquidity. We've seen some targeting on the $ vol command yesterday, moving down towards that level. So we'll look at see how price action where we open. It looks like we're having a gap down this morning. So 44.25 and 4,400 will be extremely important to the downside if we make it down to those levels. Again, moving back to the upside, we need to get above the N-trans and P-trans level and start moving up above. We denote that the out-of-the-money call speculation continues to erode above us, so this is continuing deteriorating market structure. 4,500 does have some call speculation still at that level and available, but if those continue to erode and puts and in-the-money puts start filling in that, then that would put more downward pressure on the overall PM complex. So we'll see how that plays out today, but again, staying below 44.50 for a significant amount of time will most likely put more weakness into the structure and move us down towards 44.25, and then 4,400 would be the ultimate line in the sand down at the bottom area there with a significant amount of liquidity. Zero DTE coming into today, transitions a little bit wider, 44.55 to 44.70, but a nice confluence there with the PM settled and all expiries turned on to the upside. So again, we would need to get above 44.70 and start living above that level and price stay above that level to see some of these puts start to close and erode away. Again, we see positive net deltas there at 44.85, and we do have in-the-money calls below us, but we are in the money and out of the money put dominated above and below spot price. So really it trails off pretty significantly down to that 44.25 level. That's why I've denoted that on the zero DTE and the all expiries there. If we move down towards that level, we may see some stalling as these in-the-money calls are sitting at that level. If we start to get some more price pressure and start moving down and we see these in-the-money calls start to erode, then again we could move down towards that 44.10 and 4,400 level, but we see those deltas drop off there pretty significantly. So again, vol D command will be important for intraday trading for zero DTE. We really don't see any path to move higher than 44.85 today unless we see a significant closing of these puts, so that most likely would be the cap on that. Again, we'll see how we act around 44.50 and this transition level as we are gapping down this morning. +1 DT into Friday expiry. We denote we have a decent amount of expiry. Again, we are put dominated above and below spot price, but we denote the in-the-money calls in-the-money calls still below us at 4,400. We have a significant amount of puts above us. Again, that will dampen the upward movement and most likely up to that 4,500 level. So we'll see how we handle that transition if we get up to that on the +1 DTE. Also, you can run the app, our GammaEdge app throughout the day and see how this structure is changing and evolving. But again, 44.50, staying below that for a significant amount of time will lend us to down that 44.25. Make sure you're understanding the net deltas here. You see this significant drop off in net deltas, so downward pressure may be limited. As we've discussed, down to the 44.10 level, you see those numbers drops dramatically and significantly from tens of thousands to single thousands. So that will not lend to significant more downward pressure unless we see vol D targeting. So again, transition will be important today. Staying below 44.50, I would anticipate more weakness down to 44.25, and then 4,400. We do see some in-the-money calls come in there and positive net deltas So that would most likely be the demand level that I would be looking to get, looking for some sort of bounce or stalling into there if we reach down to that level. I'm not confident that we will, just because the single net delta is really moving down to that level. Here's all expiries turned on combo complex. Again, put dominated above and below spot price. We have a section of in the money calls that are still holding on here, which really gives us that that floor moving down into these positive net deltas. 4,400, 6 billion net delta that's sitting there, so a significant amount moving down to that level. I would anticipate a stalling and demand area for the market to start moving back away from that, unless we see just a complete deterioration of these in the money calls, which is still to be determined. But those call holders here still seem to be holding extremely well. Again, we've seen a complete erosion of the call speculation above us. We do still have strikes at 4,500 and 4,525, but if we see an erosion of those above us, that will cause and put more downward pressure on the market. And any significant erosion of these in the money calls below us via closing or expiry, again, would allow us to move down a little bit further. So really 4,400 would be in my line in the sand down below. You see the deltas drop off there down to 4,410. 4,425 will be important, and then 4,450 there. We still have in the money calls. So really that reaction right around 4,450 and below, if we stay below it for a significant amount of time, or if we come back above it, will be important observations for today. Here's the landscape view. Again, we've noted some targeting down below us starting to increase. We still have call speculation above us, even though it's dropped significantly. So really we're kind of balanced at the moment. Even though we're put dominated, we still want to see these call speculators stay alive and well and start to increase these numbers if we're going to move higher. But then the put speculators, if we see those increase rapidly to the downside, then more weakness may be anticipated. So we'll watch this throughout the week, and then we can also toggle expiries on and off for next week, so we can get a landscape kind of what's happening for next week also. And then we have expiry, we have FOMC coming up, CPI data, and then we have monthly OPEX coming up. So really how we're structured heading into that will be important. Here's our market structure heat map that we've been tracking with the positive and negative net deltas. I encourage everybody to look at this every day. We've had some transitions of the liquidity stocks from green to a yellow state, and then also so we've had some transition to red. I'll go ahead and click through both of these, but it's important to understand that when this structure starts to deteriorate in the delta structure, that we will anticipate more weakness. So we'll see how this continues to play out today, but make sure you're watching this and abreast of what is happening with the right hand left pane delta structure we've discussed multiple times. If the market does decide to turn back up, the liquidity stocks that are staying green would be the first stocks that I would move into and start looking for to move back to the upside quickly. So we'll denote again, we're seeing we saw weakness yesterday in Apple, and we're seeing some weakness this morning in Apple, and it had a delta state change yesterday, which was an important observation moving into today. So we'll go ahead and click through the other list. Again, these stocks we've noticed NVIDIA, Tesla, state changes, which are extremely important. So again, you want to continue to watch these. When we start moving back to the upside, again, the red delta put dominated stocks would not be the ones that I would initially go to. I'd be looking for the green stocks or the middle of the road state changing stocks, but the stocks that are holding green, positive net deltas in a down move would be the first stocks that I would look for. Again, GammaEdge summary posted for all our members, gold members. Again, PDF, GammaEdge summary here for today. Encourage everybody to review that. The tick is also posted here, which I'll go over in just a second. Here's the ARCX structural tick. Again, complete railroad track down, negative slope on the red below cyan. Market model is turned off, so this is extremely important for observations for today if you're looking to go long the market. As I discussed yesterday and towards the end of the day, there was really no indication to do anything long whatsoever towards the end of the day. We did see a slight flattening out of the tick on the tick US, and we'll look at the filter tick, but again, still a negative slope on all of the structure. So at the very least, we would need to see the tick start to flatten out on ARCX and start moving back above these short-term moving averages. but then you had the overall writing 40,000 foot, 50,000 foot view of negative slope in the total market model. Tick US, again, we started to see that filter tick drop off roughly around 1 o'clock, so that led us to this basically flattening of the CT, again still with a negative slope. So we need to see this again flatten out and turn back to the upside, but red below cyan market model, new lows continue to outpace new highs. So that's a breadth observation that needs to change very quickly for us to move back to the upside. So 2 days of new lows outpacing new highs, and filtered tick living below zero and cumulative tick living below zero. So we'll go look at pre-market price action. Again, we're seeing SPY below the previous day low that I've denoted here. Qs significantly below the previous day low. IWM right at the previous day low, and negative GEX. So we'll see where SPX opens up. I've marked the previous day low on SPX. Again, living below 44.50 for a significant amount of time will most likely cause us a little more downward movement and weakness. Getting back above 44.50 and at the very least moving into the transition at 44.75 would be an important development, at least for a short-term move back to the upside. As we discussed, we have a significant amount of puts in the overall structure. So really what you would need to see for us to move back to the upside is these puts to start taking some profit, mechanically start closing, and then start filling in with in-the-money calls for us to move back to the upside. And again, I would anticipate that upside to be limited up to 44.85 to 44.90, and really this transition level at 44.75 may cause us some stalling area. So hopefully that helps. Everybody make it a great day. We'll be in Discord in just a few minutes, and that's it. Thank you.